With the 2024 Bitcoin halving completed, Bitcoin now has a lower inflation rate than gold. Could this mark the start of Bitcoin's journey to becoming the safe haven asset it's always promised to be? Let's find out. Since the fourth Bitcoin halving was completed on April 19, 2024, analysts are pointing to a significant shift in the cryptocurrency's economic model. The rate at which new Bitcoins are added to circulation has dropped to lower levels than that of gold, traditionally known as the standard bearer for low-inflation assets. Bitcoin's halving is hard-coded into its blockchain protocol, occurring every 4 years. It reduces the reward that miners receive for adding new blocks by 50%. This mechanism controls the supply of Bitcoins, aiming to mimic the scarcity dynamics of precious metals and maintain a low inflation rate. The most recent halving cut the reward from 6.25 to 3.125 Bitcoins per block. Before the halving, Bitcoin's annual production was around 328,500 Bitcoins. After the halving, this figure has dropped to about 164,250 Bitcoins a year. This drop leads to an inflation rate of about 0.83% per year, significantly lower than gold's annual inflation rate, which typically ranges from 1% to 1.5%. Gold has long been a symbol of stability and is known for its role as a hedge against inflation. Its annual production has remained consistent, with global output influenced by factors like mining technology and geological availability. Despite these fluctuations, gold's steady supply and intrinsic value have secured its position as a safe haven asset. Now that Bitcoin's inflation rate is lower than gold's, could Bitcoin become the safe haven asset that many hoped for? While Bitcoin has been known for its high volatility, its capped supply and decreasing inflation rate does align with at least some characteristics of a safe haven. To understand whether Bitcoin can truly be a safe haven, we must examine its price behavior and correlation with other assets. Bitcoin's market dynamics are unique due to its high volatility and its relatively young market status. Gold tends to rise in times of economic uncertainty or inflation, whereas Bitcoin's reaction to such events has been less consistent. Statistical analyses over the last 5 years show that the correlation between Bitcoin and gold is generally weak, with periods of slight positive correlation. However, Bitcoin's market is still maturing, suggesting that its role may evolve in the coming years. Let's look at how gold and Bitcoin reacted to two recent global calamities: the COVID-19 pandemic and the Russian invasion of Ukraine. In the case of gold, investor reaction to these two events was exactly as you would expect from a safe haven asset. Gold investments surged, and the gold price reached new all-time highs quickly. In Bitcoin's case, there was no such investment surge. Clearly, investors did not view Bitcoin as a safe haven asset at that time. While some have pointed to the recent Bitcoin all-time high on March 14, 2024 as evidence of Bitcoin's popularity as a hedge against high inflation, a more plausible explanation is the Bitcoin price surged due to the massive influx of capital to the recently approved Bitcoin exchange-traded funds in the United States. So is Bitcoin the new safe haven asset at long last? Unfortunately, nothing in the data reflects that position, with the Bitcoin price not responding to any major world events in a manner similar to gold, which has clearly maintained its safe haven status on those occasions. While there is potential for Bitcoin to transition toward a more stable role, its high volatility and unique market factors suggest that its behavior will remain distinct from traditional safe havens. Investors should watch these developments closely, as the Bitcoin halving could significantly impact the future trajectory of the cryptocurrency market. It could also redefine what constitutes a safe haven asset in the digital age.